Now, the balance sheet is a financial statement or a financial report of the financial condition of the CEC as of the given date. In this case, as of December 31, 2010. Now, the balance sheet basically is composed of assets and liabilities and equity based on the equation or accounting equation. This is assets minus liabilities and equity. Liabilities equals equity, or assets, okay, the amount of assets is equal to the total amount of liabilities and equity. So in this balance sheet, example balance sheet, the total amount of assets, which is 654,000 pesos, is equal to the total liabilities and equity of 654,000. So it is called balance sheet or balance because the amounts are balanced or equal. Now, the balance sheet, as stated earlier, is composed of assets, liabilities, and equity. And for the assets, we have to present first the current assets, or the cash plus those assets that are expected to be converted into cash within a period of 1 year after the balance sheet date, which in this case is December 31, 2010. So, and it should be followed by non-cash assets, okay, which in this case are the property, plant, and equipment. And in some instances, there could be another one here, which is investments and other assets. But since there are no investments and other assets, so we just state here the available accounts with balances, which are current assets and property, plant, and equipment. For the liabilities and equity, we have only one. We have only this accrued expenses under current liabilities, and we have only one equity in the amount of 641,500. Now, in the case of income statement, it is actually a financial statement that purports to show the results of operations of the CEC for a given period of time, in this case, for the year 2010. And the income statement is composed of the revenues of the CEC for the period for the year 2010, for a total of 1,083,500, as well as expenses for the year totaling to 442,000 pesos. Now, the difference between revenues and expenses is either net income or net loss. In this case, we have a net income because the total revenues exceed exceeds the total expenses. But if the total expenses is greater than the total revenues, then we have a net loss. Okay. The third basic statement for the CEC is the statement of cash flows, which, just like the income statement, is a report for a given period of time, in this case for the year 2010. The statement of cash flows actually presents the cash inflows and the cash outflows of the CEC. And these cash inflows and outflows are categorized into cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. We only have cash flows from operating activities and investing activities. We don't have cash flows from financing activities. But I'm presenting here, even if it has a zero balance, just to emphasize that there are three types of cash flows for any kind of accounting entity or business enterprise, just like the CEC, mainly cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. And take note that cash flows could either be cash inflow or cash outflow. Now, the cash flows from operating activities are net income. So from the operation of the CEC, there's a net income of 641,500, which is a cash inflow in effect. Depreciation, this is a non-cash transaction, and so we have to add it back to the net income because it has been previously deducted in the net income. Okay. Since it does not entail any cash transaction, it should be added back to the amount of net income because the entry for depreciation is debit depreciation and credit accumulated depreciation. Take note that there is no cash account that is involved in that is used in the accounting entry. The third is increase in accounts receivables. So here we have a non-cash asset of accounts receivable that increased from 0 to 24,000. Why 0? Because 2010 is the first year of operation of the CEC. So since it is the first year of operation of the CEC, the balance of accounts receivable at the beginning is 0, and so the increase is 0 to 24,000 or 24,000. Now, an increase in accounts receivable will result to a cash outflow. That is why we are deducting the amount of 24,000 here. The entry for increase in accounts receivable is debit accounts receivable and credit cash. And since we credit cash, there's a decrease in cash, so we deduct 24,000 here. And we also have an increase in accrued expenses. By the way, we don't have other non-cash items here, okay, except for the accrued expense, and there's an increase also in accrued expenses, and an increase in accrued expenses would result to increase also in cash. That's why we are adding 12,500 here. So from the operating activities, there's a cash inflow of 727,400. For the cash flows from investing activities, we have increased in property, plant, equipment of 637,500, which is the total of the net amount of property, plant, and equipment per balance sheet of 539,600 and the depreciation of 97,400. We don't have cash flows from financial activities, so that's 0. So from the three cash flows, we have a net increase or decrease in cash of 90,400. Since this is a positive amount, we have a net increase in cash in the amount of 90,400. We have a zero cash at the beginning of the year because, as I've said, the CEC has just been established and started its operation in 2010. So we don't have an ending balance in the preceding year to speak of. Now, if we add the net increase or net cash inflow of 90,400 and the cash at the beginning of the year of 0, we have a cash at the end of the year of 90,400. The breakdown of this amount is this: cash on hand, cash in bank, paid cash fund, which are these three items here under the current assets of portion of the balance sheet. So if we add the total of those three items, cash items under the current assets portion of the balance sheet, we have a total of 90,400, and that accounts for the cash at the end of the year of 90,400 per statement of cash flows. So that is the relationship between the statement of cash flow and the balance sheet. This one, okay, cash. Now, the statement of cash flow is also related to the income statement because of the net income of 641,500, which we are forwarding to the cash flows from operating activities. It is also related to depreciation, okay, which is part of the expenses of the income statement, which we are forwarding also to the statement of cash flows under the cash flows from operating activities. The income statement is related to the balance sheet Okay, because we have to forward net income to the equity or fund balance of 641,500. Now, the increase in property plant equipment, as I said a while ago, of 637,000 pesos can be recalculated by adding 539,600 and 97,400. This is much easier in this case because the financial statements are prepared for the first year of operation of the CEC. The relationships would be different in the second year because for us to be able to reconstruct this amount or to recalculate this amount, we have to add the accumulated we have to add the depreciation expense to the net property, plant, and equipment, taking into consideration the accumulated depreciation in the previous year. Also, the amount of the equity may not be equal anymore to the net income per income statement because the equity here is an accumulation of the net incomes in several periods. So in this case, the equity in year 2011, the equity would be the total of the net income for the period 2010 and net income for the period 2011. Okay, that's the equity as of 2011 in the following year. Now, the expenditures report, expenditures and revenues report is also related to the financial statement. For example, building improvement of 200,000 pesos, you will find this in the balance sheet here. Building improvement 200,000 pesos. Office furniture and fixtures 142,000, you will find it here. Here, 142,000. And the office equipment of 295,000, the same under the property, plant and equipment 295,000. Now, the amounts here, for example, this one, personal services amounting to 156,000 pesos is the salaries, falls under the salaries and employees benefits account in the income statement. So 156,000, you will find that in the income statement. Income statement, 156,000 here. Salaries and employee benefits. The rest, okay, we can also relate to the expenditures here, office supplies and to other expenses. Okay, and the revenues, subsidies, grants and donations, service fees and rent income. Okay, we can find this information also in the income statement here. Subsidies, grants and donations, service fees and rent income. So that is the interrelationship among the financial statements of a CEC. So if you find these relationships, if they are equal or if they are consistent, then we can say that the financial statements as prepared are accurate insofar as mathematical accuracy is concerned.